something that I think is really close to my heart. A little background on me, have been in the software as a service business for a number of years, and most recently joined TurnKey Lender, which is a global digital lending platform, as the CEO of the Americas. Previous to that, was a part of an organization that did marketing automation for small, and had a successful run there for about 4 years before that was sold to a larger conglomerate about 6 months ago. As it relates to banking, which is today's subject, have a background both in working in financial services with very large organizations. I worked with a company by the name of Mr. Cooper, which isn't a household name, or wasn't a household name, is now, which owns about 1 in 12 mortgage servicing rights in the United States, as well as we originated about 1.6 billion in new mortgage originations. And I was a part of a team that was both responsible for the production of new loans, as well as launching new consumer products and digitizing the platform through mobile to make it easier for customers to interact and interact with their mortgage, really, and to get better experience from the owner experience. As far as banking is concerned, have some new friends that are with larger banks, around 16 billion in assets, but also have a background in really being able to see what it's like at community banks and smaller national banks in terms of how they operate. And today's theme is really around the digitization of the banking and credit union market. A lot of us think of banks as Wells Fargo, Bank of America. Obviously, there's been a lot of transition over the last couple of years with the global health pandemic and COVID. I believe 3.5% of bank branches closed last year, which was a large number. I think that's around 3,000. And so the retail banking sector, if any of you have gone into a bank lately, you probably noticed that there's fewer occurring inside the retail location, while those also carry a pretty large expense in terms of maintaining those operations. Community banks, there's about, I have some notes here that I've written down that I'm going to be using, but there's about 4,700 community banks, which represents about 97% of all banks in the United States. And there's about 4,700, or there's about 5,200 credit unions. And when I talk about community banks, I talk about banks that typically, which is even maybe one in local communities, more rural communities, but they also operate within larger cities. I'm in Austin, and there's community banks that are here that are in some of the suburban areas, like where I live. And the first thing you need to know is that, a community bank, part of their charter, part of why they exist and why the government provides access to, the Fed funds, is for them to loan in their local markets. And so they have a real charter and a real focus on making sure that they're lending money and banking customers in those local communities and making sure that they get access to being able to be banked, which is a pretty noble cause. As far as credit unions are concerned, I know a little less about them, but their charters are actually to make sure that their members are receiving or their money is safe, because they're run by their and owned by their members, and they're there to make sure that your money is safe, and they're also there and to bank the members of their credit union. And oftentimes you'll see that they're associated with specific businesses and or categories of business. And so we're gonna focus more on the 10,000 or so today banks in those arenas. Although we could talk a little bit about the digitization of the larger banks, which I would argue have been a little further ahead in many capacities, just because of the access sources. And they're like really since 2014, banking's been digital. To give you a reference there, the band Magic had the top hit "Rude" in 2014. So that kind of dates how long it's been since digital has been around in terms of setting the consumer's expectations. And at the end of the day, like any business is about delivering an exceptional consumer experience. And fortunately, and through digitization, you can deliver that to your customers and also improve the operational expenses of the banks. In 2021, I believe on the community bank side, that shrunk by about 130 branches. There's about 2% of consolidation, so there's not a huge amount of consolidation across the community banks. And most of the profit occurs in the lending arena in those banks that are 250 million to 10 billion in terms of asset value. So not a lot of growth in the much smaller banks, but in the banks that are in the low to mid range, not considered a large bank, the lending activities have been largely driven through low interest rates, first home mortgage, and automotive mortgage, which a lot of these companies, a lot of the banks focus on in terms of their employee base. But many of them, because of the volume of requests coming in through loan officers, have really not taken advantage of the opportunity of making investments during these periods of time that obviously are going to be necessary in order for them to survive and thrive later on. In credit unions, 2019 saw the biggest drop in terms of the number of credit unions and in terms of the volume of business. And so, but they also have started business in terms of doing some things as it relates to some of the specialty lending that's occurring. And we're going to talk a little bit about that today. So in 2020, 12% of the U.S. population, and we're talking about the United States today, although I represent a company that operates in 50 countries and has 180 clients and has around 47 million customers running through the TurnKey Lender platform. But 12% of the U.S. population had an unsecured personal loan. And so that's an enormous opportunity as it relates for the community banks as well as the credit unions. And since 2012, the signature loan for both merchants as well as for individuals has tripled since 2012. And if you think about it, it kind of goes hand in hand. Some of the major drops in lending were like with HELOCs, home equity line of credit, because banks are forced to hold a ton of cash in reserve when they do home equity line of credits. And previously, that was if you wanted to do a $3,000 or $4,000 home remodel, which is about the average, you didn't have a lot of options in terms of whether you would just use savings or you would put it on a credit card. And so a lot of companies, the neobanks and some of the specialty lenders like Lending Club and Prosper, et cetera, have really filled a gap there in terms of being able to provide, signature loans up to $10,000 and taking advantage of the net income margin of you have a credit card that's charging you 26%. You have a home, refinance or new home mortgage that's at like 4.5%. And then you have this specialty signature loan area, which is in between there, which rates can vary from, I think the average is around 9%, but they can go as high as 18%, depending on your credit worthiness. And some of the things that I would say that are driving, so first of all, by 2025, which is just right around the corner, I mean, we're well into 2022 right now. 92% of all loans done globally are going to be done digitally. So if you're a community bank president, vice president, head of strategy, credit union president, and you're responsible for your organization going forward here. So the U.S. consumer expects a fully digital experience. They expect their money now. They expect quick decisioning, quick underwriting, and servicing online and through the mobile device. And I know that it's hard, but we oftentimes are retaining old models because of fear that the new models are not going to perform and be as dependable as the others. And so, but that's really already been proven out to be a fallacy. And if you're a good steward and a fiduciary for your company and for your bank, you really need to be considering how you're going to be digitizing your platform. And there's a number of software companies that are able to provide that, including TurnKey Lender, which I represent. You want to talk a little bit about like why wouldn't you digitize your bank, right? Probably the number one fear is the underwriter, right? Banks, mortgage companies, anybody involved in financial institutions depended on human beings that were hired largely to assess risk and to find risk within applications from potential customers. And the challenge is that most of that underwriting and the data available in order to make good decisions about customers is available through digital means. In the past, we use things as simple as a credit score from Equifax, Experian, or TransUnion, or pulled a triple report across three of those, and those were largely the basis for the decisioning. But there's data today. TurnKey was kind of founded on being able to help customers from a social good perspective all over the world that didn't have access to banks, didn't have access to creating a credit score, and so creating advanced models in terms of how you determine credit worthiness. Phone data, things like companies like Flinks and Plaid, who are accessing depository information. And if you're not bringing in a new customer as a community bank through a signature loan or through a personal loan, your existing customers, you have a lot of first-party data on the validity of offering them the opportunity to do a loan. And the reality is if you're not offering it and doing it, you're missing out on at least 12 to probably 25% of the business of your customer. And those customers are now going to a third party and you've lost them. Don't be fooled that these other companies that have started in lending are not going to be advancing into digital banking. In fact, I know for a fact that there are certain industries from telcos to airlines that are considering offering and becoming banks. And you entered that market for a little bit. The regulators kind of stopped that, but you'll probably see an Amazon, Walmart, Target, major retailers entering the banking field, supporting their wallets within the next couple of years. So you have this massive competition, you have massive opportunity, and then you have the uniqueness of the trust of being local and being personal. And so I think it's really important in terms of being able to, get over your fears. I'm a CEO of a company, and since 2000, probably 2008, the things that I know, or at least as a leader, that I need to be focused on as an organization, is really relates to a couple of things. Number one, we have to reduce our dependence upon full-time employees. I know it's not an easy thing to say. It's not an easy thing to do, but we are post-COVID, we have entered a labor market to where depending upon a full-time employee coming on board, being trained up and spending years with you is kind of an outdated perception of how the market's going to continue. So number one, digitization helps you to on full-time employees. let's face it, if you're a community bank president, owner, credit union president, or executive, at the end of the day, specialty loans, personal loans really have never been anything that the loan officers have been particularly interested in doing in the first place. So it can be a great entry point in terms of introducing them to your mortgage and automotive products, which continue to receive a huge amount of margin compression and profitability on those books of business. You can also expect a decrease in the productivity of employees. Or the productivity in the United States, in particular, the amount of outsourcing to offshore workers continues, and their productivity at lower rates makes them an opportunity in terms of performing many of the same tasks that typically you would be hiring in your local markets. The U.S. consumer expects perfection in its financial transactions. I've had conversations with friends overseas that work at TurnKey Lender, and some countries or some continents, it's still acceptable that 80% of the time your credit card may not work. In the United States, I tell them if a credit card doesn't work, I'm potentially not ever going to do business with that credit card again. And we're talking about it works every single time. So the customer expects everything to be perfect. They expect it to be now. And the only way that you can offer that is through digital means. You can take a loan application that used to take 4 days to 4 weeks and get that down to an acceptance of 3.1. You can 100-fold increase the number of volume of loans that you can do without any increase in your risk. In fact, I would argue that you can probably decrease the riskiness of your portfolio. And actually, if you're securitizing your loans and selling into the secondary market, you can probably achieve higher price because your loans are actually a higher quality in terms of validation because of leveraging all the unique data points that are now available in making a credit decision. You're also going to have to find new repeatable and dependable revenue streams. So, depending upon the U.S. housing market to be on fire in a positive way for the future is foolish. We all know that there's ebbs and flows in that market, and we're going on almost a decade of where we've refinanced every customer into these lower rates, and so the refinance market in the future is virtually going to dry up because you can't go lower than what the Fed is loaning at currently. And then new home purchases, as we continue to see prices escalate, access to homes become more difficult, and as interest rates rise, less people will be buying new homes. So that's going to dry up that side of the house. And then you have the automotive industry, which don't think that the captive finance providers won't drop their rates to zero, into trouble in terms of moving volume of cars, which right now, if you drive by a car dealership, you'll see that they're about half full because of supply chain issues. So, I presented a lot of information today. I guess the summary of what I would say is, if you're a bank president, if you're for a community bank, under, in that 20 billion under, maybe $1 billion and under, or 250 million and up on a credit union, it's very simple and easy for you to call a company like TurnKey Lender and within a matter of months have a fully automated end-to-end solution, from application decision engine, scorecard setup, underwriting, servicing, and collections, all being handled by the mobile device or online. And you can speed up the quality of the lending You can also improve your operational expenses considerably, and you can remain competitive and honor that charter in terms of, bringing in good customers to the bank that end up being checking customers, savings customers. At some point when CD rates come back, start buying CDs. If you offer wealth management, they can become wealth management customers. And then when they do want to buy a new home, they're already banked with you as opposed to a third party. So I'm very bullish on the opportunity banks. The only advice that I would give is that if you think that 2025 number of 92% will be online is even remotely accurate, that you need to start acting today. You need to form a committee and you need to do process improvement analysis as to how you can make all of your lending procedures digitized and deliver a consumer experience that operates in a matter of seconds. Look, it's one thing to talk about all of this lending stuff, but at the end of the day, all we want to do is deliver an exceptional lending experience, which for today's consumer means a fast, efficient loan at a fair interest rate, which uniquely the community banks and credit unions are able to offer, particularly around the fair interest rate and making things simple for their customers and offering the opportunity they do want to come in and speak to a human being at some point during the process. They have the dependability of knowing that they have that sign in their local neighborhood. So I appreciate whoever attended today's live stream. And so I'm going to bid you guys farewell. I hope it went pretty well. I look forward to hearing some reviews, both negative and positive, on some ways that I could improve it next time.